Well, this ministry inherited the functions of two and a half ministries. The Ministry of Economy, the Ministry of Public Enterprises, and some of the functions of the Ministry of the old Foreign Trade Ministry. We are responsible for investment promotion. We are responsible for the asset management program. That's basically privatization and restructuring of public enterprises, in addition to the financial sector reform program of Egypt, including the capital market, mortgage finance, insurance, and we are helping as well the Central Bank of Egypt in the banking reform. In the first 2 years of our term, from 04 to 06, we adopted what I call the overwhelming approach of reform. In many sectors, we adopted some unprecedented measures of reform, from cutting taxes by 50% to reducing unilaterally our tariff rates by more than 50%, starting the privatization program, including in some areas that were not touched before by previous governments since the start of the privatization program in 1991. We improved the business environment, including the permits and licenses for establishment of firms. In the past, to establish your firm in Egypt, it would take you 140 days to do it. Today, it takes only 72 hours. That's why we were in the list of the top 10 doing business reformers during the last 4 years, 3 times in 4 years, which is a record. And basically, all of these reforms encouraged the private sector investments to grow by around 35% per annum, and to have this unprecedented inflow of capital to the country from a very small figure of $2 billion, which was less than 1.5% of GDP, to around $13.2 billion last year, which is around 8.5% of GDP, one of the highest rates in the emerging markets and the developing world. Well, from 1997 until 2004, our economic performance left a lot to be desired. Very slow growth, high unemployment rate, increasing levels of poverty. And meanwhile, the world economy was very supportive, very benign environment for the emerging markets at the time. And we have been seeing many developing countries around us doing very well, doing great in attraction of investments and growth. And the formula is not very complicated in order to improve your sustainability of growth. So we did that. Almost everybody. It's a sector that has been growing by double the real economic growth rate, by around 14 to 16% per annum during the last 3 years, while our average real growth rate was until last year 7%. So you can see the big gated communities by private sector real estate developers from Egypt and from the Arab world, and with some involvements as well in terms of the know-how and support from Europe and the United States. In addition to that, you get your typical construction company doing as well its contribution to the development, in addition to the heavy investments in the infrastructure related to these big real estate developments. And it's taking actually all of the categories and levels of income and housing as well, from the small housing units of 40 to 60 square meters to the very big houses and mansions around Cairo. Absolutely. A couple of years ago, we were checking the figures and the structure of FDI. It was around 80% of FDI, of net FDI, in the year 2004, concentrated in the oil sector, and 20% in the rest of the economy, including manufacturing, CIT, financial services. with the reforms and the interest of many investors, not just our typical investors from Europe, from the United States, and from the Gulf countries, started to see investors coming from India, China, Russia, from some of the African countries as well. And with this kind of diversified sources of FDI, we started to see as well further diversification of the areas of investment in Egypt, including manufacturing, which was actually one of the most attractive sectors, benefiting from the competitiveness of the sector, the relatively low wages for workers, and the proximity from the markets around us, from Africa, the African market, the Arabian markets, the Mediterranean, and Europe. And with the new protocols and arrangements with the United States, the manufacturing sector managed to get more investments, not just from Egyptians, but from Arabs and from all over the world. It's, I think, around 45% of manufactured and semi-manufactured goods. Well, we have been seeing very positive developments in the employment front. We got not just the typical statistics of unemployment, but we are getting this issue of the employment very seriously because of the fact that it's one of the pledges of our president during the elections campaign, and there is a commitment for a creation of jobs, a certain number per annum, to reach 4.5 million created jobs by the end of 2011. So we do the unemployment surveys, and we do the follow-up of the records of the Social Security Registry. And we have seen the unemployment rate falling from 11.5% in 2004 to around 8.2% in the year 2008. This is very positive in a country that has an annual demographic growth of around 1.9%, and with more and more participation as well in the labor market, we see the growth in the labor demand of around 4% per annum. So this means that we have managed to take something of the stock of unemployment, and we availed new jobs for our young population. And they are doing very well as well in the manufacturing of hardware, in the outsourcing, in the competition for call centers, businesses. And we managed to win a couple of important bids for call centers during the last few months. This encouraged us not to stop just at the smart village, but jointly with the Ministry of Communication and Information Technology, we are building a new investment zone for technology-based industry and the CIT at large. Absolutely, this is one of the attractive sectors now for our young, bright population. You can see the number of entrants to engineering and technical schools and faculties is increasing. And we have been seeing as well very positive support by the application of a public-private partnership scheme by the government. We are availing land and resources at a very competitive price. We are helping as well in the training of those potential employees and workers and engineers in the smart village and in the new investment zone for CIT. Through association and management agreements with the big manufacturers, especially the Europeans, some of the American names as well, in addition to a few Asian names, we increased the contribution of Egyptian manufacturing from just the simple assembly work that we were good at 15 years ago to more and more contribution and domestic value added, to the extent that we reached 40% in some vehicles, in and more than 55 to 60% in other vehicles with very big and important brands. What helped us is this kind of flexibility of exporting, not just to cater for the needs of the domestic market, which is growing nicely and it's very attractive for the car manufacturers here, but to cater for the needs of some of the Arab countries and for the African countries as well. Well, there are some sectors that are going to be affected definitely by the financial crisis through the real economy channels. When you see that our trading partners in Europe and the United States are expecting their economies to grow by zero in the year 2009, this is going to be having a negative impact on our exports, which were growing at 30% plus per annum. The other thing is related to foreign direct investment, and we are trying to intensify our campaigns and our incentives for attraction of investments here. It's going to be more difficult and challenging year than normal. In addition to that, there are some negative implications on tourism and possibly on the traffic in the Suez Canal. But having said that, there are some opportunities actually being created for an economy that has its financial system intact and with ample liquidity available for advancing credit to the private sector. The credit to deposit ratio is around 49%. The credit to GDP ratio is around 33%. This is a kind of a blessing and an advantage in such circumstances that, in the emerging markets and the developing world. So we are expecting that our financial sector is going to be very active and agile to support our investments and our exports abroad. And but beyond that, we are not really seeing further negative impact on the economy, especially on the financial sector, because the banking sector and the rest of the financial sector were basically under very good scrutiny because they were under the banking and the financial sector reform program. Absolutely. We are renewing our approach of investment promotion. We are doing more visits to the neighboring countries in the Gulf area. We have visits as well, well prepared for India, China, Korea. There are some planned visits to Europe as well during the forthcoming weeks. And there are a couple of visits as well being prepared for the United States and Canada, but by the end of the first quarter of '09. But it's not just the visits, it's the way that we are preparing some of the identified projects supported by the different line ministries. We are going to give the opportunities in different sectors with full preparation in terms of permits and all of these problems that take from the investors a while, the bureaucratic hurdles we are going to be taken care of. So all of these projects we are going to be ready with just a simple approach by the investor to benefit from the ease of doing business in Egypt. In addition to that, there had been some suggestions regarding the land availability for manufacturing. We are very well prepared for that in terms of land supported by infrastructure. There are some support as well from the financial sector and the support required for energy, especially in Upper Egypt and the south of the country, where we are availing the natural gas for manufacturing purposes. Well, it is not just an issue of knowledge because of the fact that investment and growth have been basically benefit more sectors than others. Manufacturing, CIT, financial services were among the winners during the last 4 years. Agriculture and farming was not really that fast. Construction sector did very well, but transport didn't do that good. So the issue of sectoral discrepancy could be an issue of concern. While everybody has his or her income increasing during the last 4 years, the issue of discrepancy of income could be an issue of concern, and that's why you don't really see all people in all sectors are enjoying the fruits of growth equally. The other thing that the growth in Egypt was not really that equal as well regionally. Some regions in the north around Cairo were much more attractive because they were much more ready for the new investments than, say, Upper Egypt in the south. And that's why we're putting more investments in infrastructure, in natural gas networks, in energy networks, more bridges to link the two banks of the Nile, or long roads to connect the valley to the Red Sea. All of these investments are going to be making not just the Upper Egypt area attractive, but are going to be making those whom you may be meeting in these governorates happier with the impact of growth on them. Well, I think the big challenge is the sustainability of growth, because in the past we had these ups and downs of real economic growth. Some years we made it to 6 or 7% or even 8%, as it happened in the 60s, and a couple of years in the 70s. But what we are after today is sustainable, equal growth. This is basically our key. And to do that, we need to do many things, not just promotion campaigns and availing opportunities for investments. We need to take the issue related to adequate integration with the rest of the world very seriously, and openness of our markets with effective regulations of the markets. We need to invest further in our human capital, education, and health. We need to take the issues related to savings and investments more seriously than what we are doing today. If we're doing that, I think we'll be very much on track, and we'll be having already a good track record of growth with its positive impact on the standard of living of the typical Egyptian.